Well, we're going to keep a close eye on what's going on in our ag commodity trade. We have got a lot of weakness in this grain market this morning as we kick off our last trading week of March. It's only a partial week at that. Let's look at our corn market first, and our quotes are provided by bar chart on the corn market on that May contract. Ooh-wee, we have the May contract down 9¼ cents now at 5.43¼ and that's within about a penny of our low of the day right now. We had a high last night of 5.52, and we have come off of that by about 9 cents here. July is down 7¾ and we have that December new crop contract now 4¾ cents lower. We're trading at 4.61¾ and believe it or not, that's about a nickel off of our overnight low. We're still about 6 cents from our overnight high too. Now in the soybeans, very interesting dynamics at work in this soybean trade here today. Check out, for example, that nearby May contract, which is down 14½ cents at 13.86 per bushel. When we wrapped up last week, we were over 14 bucks. Now we're at 13.86. And we have the July contract down 13. We're at 13.78 now. And November new crop soybeans are 12.05. That would be down just 2¼ cents. And that spread actually narrowing up by about 12 cents right now, just in today's trade already. Onto the wheat we go, and looking at Chicago, we have that May contract down 4.5, July down 6 cents. We're at 6.03¼ per bushel. In the Kansas City market here this morning, we have the May down 9.5 at 5.58¾ Remember, we had that spread narrowing back up between Chicago and Kansas City, I believe Thursday and Friday last week, but now it's widening out again. And July currently down 9.5 cents at 5.65. Looks like that spread on the May contracts between Kansas City and Chicago is about 50 cents now. Ooh. If you look at the spring wheat trade, we now have the May contract in Minneapolis down 5.75 at 6.08¼ in July down 6. Well, let's bring in Chris Swift of Swift Trading, and he's based in Nashville. Chris, looking at the grain market activity here, boy, they're really getting weak in the knees here on a Monday ahead of some major reports. Why, do you think?
Well, I think you just answered it. Those major reports coming out from Wednesday are going to be big to the market. And with I think the trade guess is 93.2 on corn and 89.9 with beans. Both of those are right in line with the 2017 crop numbers that were the biggest so far. So these are going to equal some of the largest numbers of acres that we've ever put in the ground.
Do you think there is any possibility that that acreage will be shifting based on weather patterns or any out of our ag commodity market dynamics going on in some of the outside markets right now?
You know, there would be some, but in all honesty, most farmers made their decisions a long time before now, and you would see very little bit of swapping. I don't think price right now could make that big of a difference. Maybe it could, but I kind of doubt it. Weather, if you're hampering weather putting in corn, then naturally beans may go in after that, but we're several weeks away before that would become a factor.
Okay, we'll pause here, and Chris, we'll take a look at our livestock trade and see what's going on there, and maybe talk about some of these equity markets too a little bit, and if they have a connection. We'll talk about that right after this. And again, just to update you, in case you hadn't heard, that ship that had been blocking the Suez Canal has been freed. It floated a little further down the stream so it would get to an anchor point to get out of the road, basically, and trade should be starting to move through the canal probably later on today. I'm sure they're checking everything out right now. Just wanted to get you up to date on that. We're talking with Chris Swift right now, and Chris, as we look at our livestock market activity this morning, we were wondering if there was a hedge fund that went under last Friday, and there was a liquidation of their shares. It caused some turmoil in the stock market. It was weaker over the weekend. We wondered if that would spill over into any of the ag commodities, especially the livestock trade this morning. And it looks like early on, based on the open here, we'll look at our prices provided by bar chart. Probably not, right?
Yeah, it doesn't look like it. And that was a hedge fund, not a commodity fund, to the best of my knowledge. And so probably to try to be out of specifics, it's more equities than it is commodities. Okay,
so far we're higher across the board here on the live cattle board. And right now it looks like the April contract is quoted at 120.55. That's 45 cents higher. And June is 35 cents higher than Friday's close. We're at 122.12. Now, on the feeder cattle side here this morning in the early going today, we have the April contract $0.50 higher. We're at 145.62, and May is 47 cents higher at 150.35. If you look at our livestock summary from Friday, we actually had a little bit of cash cattle activity out in the plains. We had Colorado reporting about 600 head sold at 116. Look at that. Dress basis sales, we had a few that sold in Nebraska, a little over 700 head, and they were bringing 185 per hundredweight, and that would be about steady. But definitely we gained a couple of dollars on that cash cattle market last week. Is that something they can build on this week, Chris?
Well, we sure hope that we can. We looked at last week and saw that we were just a little bit still heavy on all the weight, about 15 pounds heavier than this time last year, and the slaughter level just a little bit lower than what we had seen. So beef production not down that much, so we believe that the baits increasing here or have stayed the same is helping to offset a little bit of lesser slaughter out there. But it is springtime, and it's really pretty here in Nashville. It wouldn't surprise me to see those grills fire up here before long.
Absolutely. Well, too late. I've been doing that for a while here. Cash live hogs around the country. We can bring that graphic back up. Cash live hogs were up $1.75 Friday, so they had a good run. Carcass basis hogs were up $1.82 across the country. On the beef cutout values last Friday, we had the choice cuts gaining $1.21. They were priced all the way up to $237.66. Selects were up $1.52. If you look at the pork carcass cutout values, they were down $1.71 as we headed into the weekend. All of the primal cuts on the pork side were lower. What are the pork futures doing today? Well, they have been under pressure here. And let's take a look at our lean hog trade with our quotes provided by Bar Chart. April down 60 cents at $100.20. It dipped down below $100 momentarily on the open, but now we're back above it. May lean hogs 95 lower at $100.40. And it has come back. When it dipped below $100, we got back above it by nearly $0.50 now. So that's the latest, June through August, down over $1. Chris, thanks for the information. Good to talk with you. Chris Swift of Swift Trading in Nashville. Janet?